The U.S. economy center stage in Tuesday night's GOP debate with the issue of unemployment and low wages really dominating much of the conversation.
I'm doing great with the Hispanics. I'm going to win the Hispanics because they know I'm going to bring back jobs from lots of places, including India and China and lots of places.
And, of course, that was Donald Trump with us yesterday talking about his plan to create jobs in the U.S. I'm here now with EY Global Chairman and CEO Mark Weinberger. We are here at the EY Worldwide Developers Conference in Palm Springs, California. Mark, good to see you. Thank you so much for hosting us.
Always a pleasure, Maria. Thank you.
We appreciate being here. You speak to so many companies all around the world. How many countries is EY in right now?
About 152.
Wow. And you've got employees all over the world and have a really good sense of what's going on in the economy. So I want to get your take right off the bat, because this morning we have news that Nordstrom is falling out of bed. The stock is down sharply because of weak sales numbers. We got news that Cisco is giving us a warning about the next quarter. That stock is under pressure. And we got weak numbers coming out of the Eurozone. How does Mark Weinberger see things?
Well, there is clearly headwinds out there, as we can see from those numbers, Maria. There's, I call it the uncertainty tax. And it's not the 2008 troubles where we're falling off a cliff or anything like that. But when you look at the geopolitical uncertainties that are out there, whether or not, Russia and U.S. are going to escalate in Syria, or whether China is going to devalue the dollar again, or what may happen in the growth rates of China, you look at the monetary policy diversions around the world, where the U.S. is thinking of raising and the U.K. is going ahead and thinking about ECP, expansion of quantitative easing, and you look at oil prices fluctuating all over, it's hard to make business decisions with all that's going on.
Right. So this uncertainty factor has companies sitting on cash, waiting to make hiring decisions until more clarity is seen. It seems like a fragile situation. What do you think it's going to take to sort of break us out of this malaise?
Well, the good news is, in the U.S. at least, we got past this fiscal cliff. That was a big issue, too.
Yes,
and, of course, that was positive, something good. We always spot the good things and call them when we see them. I do think it's going to take time. It's still, when you look at what's going on out there, the nationalistic focus of countries trying to get over the frustration of 8 years of slow growth are building walls around their economies. And what that's doing is having a negative effect on global trade, which is really important. It'd be great to get the trade deals moving again.
Right.
Tax reform you've talked about a lot. You did a great job with your colleagues in the debate, bringing out the substantive issues there. Those type of things would be a big boost to business investment.
Yeah, I'm glad you mentioned that, because I want you to make the case. Explain to our audience why tax reform matters and why it will lead to jobs. We talk all about tax reform, but I don't know that the average guy and gal out there understands why it's so important, because it may lead to jobs. Tell us why.
Absolutely. Two elements to it. One, overall jobs, and two, U.S. jobs. So the issue is that we have a very uncompetitive tax system. We have the highest rate with the global taxation of all U.S. businesses, which is out of step with the rest of the world. Remember, 95% of the world's consumers and 80% of all GDP activity occurs outside the United States. And 50% or more of U.S. businesses' revenue is from outside the United States. So if they're going to do well, we need a strong U.S. economy, but you need to be able to compete overseas. We talk about the $2 trillion that's trapped overseas, but if U.S. businesses can't earn that money, they can't bring it home. So that competitiveness is really wrapped in both Democrat and Republican talking points now about what we need to do to have a more level playing field in the tax area. Without that certainty of lower rates and a competitive base, CapEx is going down every quarter, and job hiring is slower than it would be in order to fulfill the needs of the businesses for going forward.
Which is why, for certainly GOP voters, who were watching at the debate the other night, tax reform is critical, and they say they want it at the top of the agenda. Let me get your take on what you're expecting for the fourth quarter. Here we are in a quarter where we've already heard from Cisco, who says, look, we're going to see a tough performance in the next quarter. Christmas, the holiday selling season, is so important for overall business. What does it look like to you?
Well, the strong dollar continues to be a heavyweight.
That's why manufacturing has weakened, and we've had this whole collapse in the commodities complex.
Absolutely right. The commodity collapse, the manufacturing slowness, and even the retail sector that you've talked about so much. When you look at it, lack of tourism coming in from overseas because of the strong dollar, inventories are too high, you got to bring down the inventory levels. Those things are going to be for a slower growth in the short term. You hear the weather issue and things like that. The real question, though, comes back to, Maria, what is the longer term economic opportunity? And when we get more certainty around some of these economic and political issues, I think we'll be better off.
Which tax plan do you think is best? I mean, coming from you, this is important. You were a former Treasury official. You've been studying this and been a student of tax reform for so many years. What do you think looks like it could have the goods to actually move things in terms of jobs? Which tax plan?
Well, what I've learned is that when you're in the political season, you get a lot of great ideas. When you get elected, you go to the legislative process. So reality is that they're focusing, the Republicans at least, are focusing on lower rates and a more competitive international tax system.
And that's what you want them to do.
That's absolutely right. That's critical.
Right.
That's crucial. That is where the rest of the world was. The OECD countries, 90% of them have lowered their corporate rates and contracted their base over the last 10 years. The U.S. has been an outlier. Right. And actually, back in 1986, we lowered our rate to 35%. We were one of the lowest in the entire OECD. Now we're the highest. So we really need to get that fixed. So whether it's 20 or 25%, what your base is going to be, that's going to be worked out through the legislative process. The other element that the Republicans put on the table, expensing. Now we have this bonus depreciation, which expires every couple of years. Right. Permanent expensing would be a big boom to CapEx investment, which we said, again, was going down every quarter.
We need to see that CapEx investment. Real quick on the U.S. versus the rest of the rest of the world, rather, because if a person wants to invest or a company wants to invest, they're doing much of the investment in the U.S., even though the CapEx story is a weak story.
Yeah, that's right. I mean, right now, if you talk to people around the world and they're saying, where am I going to allocate my resources, whether financial companies or manufacturers, still 60, 70 cents on every dollar is going to be in the U.S. because of the fear in the rest of the world of rapidly changing commodity prices or currency prices. So relative to the rest of the world, the U.S. is still strong. That will not remain, though, unless the rest of the world continues to grow.
And the emerging markets on the other side of that coin, what's going to get those markets moving?
Well, the China slowdown, of course, affects the commodity markets like Brazil and Africa and others and really hurts them. Oil prices has a mixed effect on different emerging markets. But reality is, if you talk to businesses who can think long-term, you and I have had this discussion many times, right. Short-term thinking versus long-term, you got to separate the signal from the noise. Yeah. The signal is, 90% of all people under 30 live in emerging markets. 157 of the global Fortune 500 are in emerging markets. Businesses have to be there. Wow. So they have to get through this volatility.
Really good stuff. Thanks so much for your insights, Mark.
Always a pleasure.
Good to see you, Mark Weinberger.